Good afternoon. It is July 1st. The first half is over and we did great. You follow our portfolios, you know we did good. It is the Wall Street Weekly Wrap-Up with your host, John Newquist. And we're going to get into it because we had some interesting things that we're going to talk about. An October crash is coming. Why? Because student loans have to be paid back in October. The average loan, according to BLS, or I forgot, the Department of Education, is $400 a month, and there's $40 million, and that means $16 billion out of the market. Now, you see, think about the bank collapse. You know, that was back in 2008, and I think it was $125 million to the banks. You're talking this money in a year, and there's no bailout, there's no stoppage, and you know they want to do it, but I don't think it's going to happen. So guess what? People are spending nice right now. Maybe before October, around about the second, third week, fourth week of September, the things are going to get tight. People are going to cut back spending, travel, everything that's extra. You know, I was listening to the Costco person. They're not buying steaks anymore. They're buying chickens. You know, they might not be buying chickens in there. They may be buying, you know, potatoes and rice and the basic starches and stuff. So I don't underestimate. I've seen it before. This is your chance to take profits, get out of the market. If you're in it for the long term, I mean long term, like 10 more years like us, then you know you can put up with it. But just be prepared. This is going to be some ugly contraction, and when it comes, it's going to be like the tidal wave, and you may not have profits at the end of the year if it is that bad. You know, I remember '87. Everybody was doing great until the September crash, and it wiped out all the profits. So, you know, hedge some of it. Take some of the profits off the table. Don't be at the end of the year and say, "Wow, I should have sold something." Okay. GNRC, wow, that Texas heat wave was brutal. It was, I mean, 120-degree heat index in Houston, and guess GNRC's going up and up and up. Now this is, if you look at this chart, holy smokes, GNRC was $300. You know, and again, I watched that 50, 200-day cross. It hit over here. That's your time to get in. You know, you would have bought it in here, you would have took it all the way down. So yeah, you missed it at the low, but that's no big deal. They give you time to get in, and that's the big thing. It is. You got a chance. Get in on the cross, and you can ride it up. It's going to go well. Again, you know, figuring that the summer's not going to be cool. Stats of the week: the 2 years unchanged, went up 13 basis points, almost 5% again. Crude is really trying to hold on to 70. It's gone below it. It's gone a little bit above it. Natural gas is still below 3, but it's higher than it was. I mean, you know, we're down to 220s before. Gold is still below 2,000, and the one we're watching is copper. Copper is in a long wedge. Which way it'll go, we don't know, but we want to go the direction when it breaks. If it goes up, then we want to be in some copper. If it goes down, we want to be out of copper. So don't fight the market trend. Just watch the charts and take a look at it. Alexa, stop. I don't know what that was about. When we look at the index, wow, you can't get a better year. I mean, look at the NASDAQ, 31%. S&P, 15%. If you average 8% a year, you have now gotten 2 years of gains just by holding the S&P. And our goal is always, because we have a diversified portfolio among all the 11 sectors, we want to beat the S&P every year, and we have. But look at this. Holy smokes. I'm going to do all the math this afternoon and figure out what the portfolio came out with this year. I know we're doing good because we had 6 of the AI8, and that's an incredible number. And NVDA, what was the number one stock? Well, we owned it. It was NVIDIA. What was the number one stock? NVIDIA. You know, we've held NVIDIA for, 10 plus years. So are we selling some? Maybe take a little off. Don't take the core off. Don't take 80% and sell it because you want to time the market. Remember, I always look at it. You make long-term profit, you're going to pay 33% taxes or so. 25, 33. Not worth to do the buy and selling. Just hold on to it. We were looking for stocks in 2030 that are going to be good still. Not that we're timing it, figure it's going to collapse. We sell stocks when they're bad, when they drop earnings, or they don't make anything. Wheat has gone down. And, this is one of those cases, okay, the chart, the 200-day moving average is at 7, it's at 6. Someday, you got to sit there and pull a plug because we're not going to go down to 0. And all I do is look at the high temperatures in the Great Plains, Texas, Illinois, where I'm at, and I says, it's 6 now. It might be 10 by the time October rolls around. I mean, my grass is yellow. The wheat is not going to do well in this brutal heat and drought. So people are not talking about it. You know, it got up here. It's been slowly dropping, but I think we're at the 50-day. That's not a bad number. You know, is it going to cross? Heck, it might not cross until December if it crosses at all. But let's just nibble on wheat. Don't go in 100%. Just, you know, ease into it. 20%, 30%. See what we get in here. Because, like I said, it was $11. It won't probably go up to $11, but you know how it is. Once there's a shortage, things shoot up like a rocket. You know, 2 or 3 months it could be that way. Nike missed the earnings, beat on the revenue. I just look at the revenues went 4%, 4.9% up. It's not bad. You know, it's retail. Retail's a tough market. China is the stunning number was up 25% because China's been flat. China's not even going up 5% growth, and Nike's doing something right over in China, so that's not so bad. Is it time to buy it? That's what everybody asks. Oh no, well, it's in an uptrend. It is a wedge, you know, a triangle as I call it, straight going up. Choose the direction it breaks out. You know, I mean, if you think it's gonna go, you're not a bad price, but you know, I always just say, why didn't you just wait? It's not gonna hurt you. You know, you can do it if you wait. You'll be, you know, better off. But I think you can wait. And then Apple, we have to talk about it. First $3 trillion stock close. It just did a bump up and it went higher during the day, and it's a wedge and it's broke out of the wedge. And technically you would want to buy it, but you know, Apple's revenues, they're not growing double digits. They're negative revenues. They may have negative revenues next year. You know, I mean, yeah, they got the Google goggles or the goggle, and called Google goggles, but the high vis tech, and it might be the future. But I don't want companies with flat revenues. I don't care if it's worth $3 trillion or not. Exxon, number one stock in 2014 market cap, it dropped over 80%. GE 2000 dropped over 90%. You don't need stocks that aren't growing. I know Apple's got a big base, but let's grow the revenues. Don't nibble until you get revenue growth. And then we'll take a look at Sam. Everybody's talking, oh, time to get in the Sam Adams beer, you know, because this thing was $1,200. When they put out that truly awful, and it was called Truly, the hard seltzer, I would think, oh my God, it's so sweet, sickening sweet. I couldn't even drink it. I just said, put this back. I'd rather have a little more carbonation and soda water than I'd have this, you know, overkill of the fruit flavors. So it's dropped quite a bit, and people are thinking, when's the time to buy? Well, you know, our 200-day moving average is slowly coming down over here, and here's a stock below it. The 50 is below it, and I just said, let's just wait. We can wait. You know, you can buy this wedge. You can do it, and you think it's low, but I'm not to say that it doesn't get better. I mean, you know, who knows? I mean, people, you know, is Twisted Tea going to bring it up? No, the beer sales are going to bring it up. And again, if we have an October, the beer companies have done well. I just don't like the chart. I don't like, probably if I looked at the revenues, probably the same thing. And again, like I said, we added the wheat future, you know, the WEAT, because we think wheat is going to go higher than it is. And again, we're nibbled into it. So added more SoFi because I think they're going to benefit when the student loan replaced. Remember, the big curveball is if Congress delays it, pushes it off again, cuts some of it, then that's going to affect it. Everybody's telling me, get into the REITs, get into the REITs. Well, no. We're underweight REITs. WPC, it's under here. It's gone down. We got to be in the sector. We're staying in the sector. I like the company. It's going to make money and everything else. But commercial real estate, I just go by. Man, 1/3 of the stores seem like they're vacant in these strip malls. That's not good. And if you got the paper, you could be like San Francisco, where they're just walking away and say, just take it. Just take it. I'm done with it. That could go nationwide. When you can't sit there and say, I can't pay this thing off, I'm too far in debt, you're just walking away, whatever money you spend into it. And now what do you do if you're the owner? You can't sell it for apartments. You know, it's just a nightmare that's coming up. Will it happen? We don't know. We don't know. New York's come back on retail. So if New York can come back, anybody can come back. So this is an issue. I just said, I look at it, I watch it, but, you know, when interest rates get down to, you know, let's say 2% again, then it's time to get back in, you know, because people will find out it's cheaper to buy new things again. With that, it's a 10-minute show. We'll see you next week. We'll have all the stuff from the first half, and I know it's a good first half. So stay tuned then. See you next week. Bye.